We are rolling, guys, with episode 1. This series, we're going to take you through small cap. Me, Kevin Avery, and Josh, AK47. We've been trading small caps for, 10 years now? We're going to be going through the 101s, A through Z. We're going to start with what are penny stocks, small caps, and why trade them. What are your thoughts?
Well, like you said, been doing this for a while, so my thoughts have changed over the years. You know, you definitely have a different thought process when you first start to where you get to 2 years into, 5 years in, and now, like you said, we're almost about 10 years in, a full decade. So things change. At first, it's very fast paced. The thing that comes to stock trading that you come to, it's very fast paced and I can make a lot of money in a quick money, short amount of time. And that's what everyone wants in the world we live in now. We have a lot of jobs, a lot of things we do. We're always on our phone. We're busy, right? Our attention span throughout the years, they've done studies, has gone down. So it's really great for a lot of humans. Hey, let me make money in a short amount of time. Great. And there's a lot of it that can be made in a short amount of time. But on the transverse side of that, there's a lot of money that can be lost in a short amount of time as well. So
did you get started with penny stocks? I mean, was that what you got first introduced to?
Yeah, and a lot of people to it first. You go to that sub $1 area, and that's the thing. Then you kind of get to that defining moment of, and that's kind of, it's more micro cap at first. It was like 5 cent plays, 3 cent plays, 2 cent plays, and like a lot of people do, you try to go way too big. Ooh, because I can get 10,000, 20,000 shares because my account size is only 3K, 5K, 7K, whatever it is. And so for me, I started with that. But then I realized that, like, as we grow older, we don't really like those plays a lot. Now I never even look at them. So I typically, and I even moved to $1, $2, $3 plays. And I still trade those, but at first my account size wasn't big enough. So I couldn't do $5 to $10, $15 plays. And so again, my thoughts changed throughout the year. So at first, let's go to 3, 4, 5 cent plays. And then it was like, nope, don't like that. Let's go to $1, $2, $3, $4, $5 plays. And then as my count grew, and there were times I can say, hey, it isn't all about the money. I don't have to go in 3, 4, 5,000 shares. I can go in 100 shares, 50 shares, and still make money from a stock that's $15 or $20. And that's where things start changing. You realize it's not all about the money. It's about being accurate and just getting the right trades in.
I started real similar to you. I mean, amateurs, we get into it and seeing how much you can make on these high volatile tickers that are low float penny stock that are a few dollars. And what I would do is, like most people's journey, focused on the money rather than the risk. So like you said, go in thousands of shares, like there's so much money to make here, and you don't have any mindset about the risk at all. There's nothing there, because it's profit. But as you progress in your trading journey, a lot of us start there. What we start seeing is, okay, we might need to apply a little risk on these trades. Certainly you can make a lot, but as Josh said, you can lose a lot as well. Well, that leads me to the next topic here, which is the definition of a penny stock. Well, Josh said it, pretty much under $5. The market capitalization of these tickers is usually 50 million or less. And you get that by multiply the stock price by the shares outstanding on the company. Now, what's interesting, Josh, with some of these small cap plays is what I've seen is I like to look at the shares outstanding. That's going to include the institutions, insiders, and public. But some of them will have absolutely no insiders actually even buying their own companies.
Yeah.
Have you noticed that?
Yeah.
Like
0%. Yeah, I mean, and that's the thing too that you get into at first. Well, at first it's this: it's buy. You think you're going to buy and sell, then you realize there's a thing called shorting, and then down the line, like even today, I think it was yesterday actually, like when being Chinese plays or Asian plays, but usually it's a Chinese company, very sketchy, and these plays can skyrocket out of nowhere, and you'll see these little things as time go on, like you're talking about. And the biggest thing overall is finding which we'll get into that as well, is who are you going to be as a trader? You know, I always talk about this: how many different point guards in the NBA? How many different small forwards? Go to soccer. How many different goalies or forwards? Go to football. How many different quarterbacks? But anyway, they find what they're good at. You got different surgeons in the world, different plumbers in the world. You go across the board, but they're doing the same thing all day, every day. They're doing the same exact thing, practicing the same exact reps, doing the same thing over and over and over. And that's where they got so good at their craft. That's at first another thing that's so hard at this, because in small caps and penny stocks, there's so many different ways to make money, like investing in itself. So defining that early on. And so you've got all these stocks that we talked about that are moving, they're volatile. And to me, high volatile. There are some that are slower. And that's what I tell traders, find something that has, and we would talk about float. Float's going to be huge, right? What is the float size overall for that ticker? And so if you have lower floats, it's going to be more volatile. You're going to see 80%, 100%, 300%, 500%, 1000% moves in a day. And if it's a bigger float, again, we'll go number wise for me. If it's 1 mil, 2 mil, 3 mil, 4 mil, 5 mil, that's a lower float. Under 1 mil, super low float. I call medium a medium area from about 5 to 15, and then medium for me goes from 15 to about 30 to 40, and then 50 gets large to about 100. Then 100 plus is just a big slow guy. And so with those slower guys, you won't see as big percentage moves.
Bouncing off of that, guys, I would love to show you a stock that both Josh and I experienced 10 years ago, actually in the shipping sector. Now, there's a ticker specifically, DRYS, that we're going to go over. And this was my introduction into pretty much small caps. This ticker made a move from like $1 up to $100. And the interesting thing was, this was not a low float ticker, but it became a low float ticker because of how many reverse splits they did. There was a period of time where this company did like 3 or 4 reverse splits in the summer, and they were trying to do that to regain NASDAQ compliance. You're going to notice that with tickers that are under $1. If they trend that way for 6 months, they get delisted. So they want to regain compliance. They did a 1 to 25 reverse split, which if you had 1,000 shares of this stock, now you have 40. So completely dilutes the current shareholders. It's a very bearish thing. And I'll show you guys the chart. Here's DRYS. We can see what it did. This was over just a couple days, a few dollars up to 100 before it came crashing back down. Now, what we're going to see is with a lot of these tickers, even recently, I saw a few that these companies were awful. The finances are awful, like DRYS, but it doesn't matter. If you get the majority of traders on one side of the move that are so convicted, oh, this is an easy short, and then all of a sudden you get some people buying, and then like we saw with GME, for instance, 100% of the float was short. So all there is buying. There's no selling because the shorts have to cover their positions, and then you have people buying to squeeze them out. This was my introduction. Some of these plays that can be very, very dangerous, so you have to always be respectful of risk.
Yeah, 100%. That's crazy to see that. And you're going to see that continuing. I mean, we're going to see plays probably now every year's different, but certain years, like again, going back to 2020 into 2021 with GameStop and of course all that Reddit, and not going to get into essentially all that, but that was more pushed for a certain agenda, right? But you're going to just point being, you'll see times where a stock comes out with a PR or there is no PR. And it was actually even one, go back to 2022, you can go pull it up right now on your charts. If you have a computer, it's called HKD. Pull up the ticker HKD, new IPO play, July 2022 into the 1st of August of 2021. This play went from $30, $40 all the way up to $2,500 before crashing back down. Yeah. So, and that was probably over about a week's worth of time that it did that. And so you had days where it was, I mean, you can imagine it was. And then I remember one of those like early on plays was in 2017, back right after the shippers were spiking. It was LFIN, LFIN, because everyone was moving to blockchain, essentially, blockchain. Yep. Everyone was releasing this in December of 2017, and I watched the play go from 5 to 147 in a 2-day period, and of course come crashing back down. But yeah, and
I've heard story after story of traders, and the thing is, guys, they're good traders. I mean, they may be profitable over the course of years, but then they get comfortable. Comfortability is a scary thing in trading. You get comfortable, you padded the wallet over the last few years, you got some more money, you think you can apply more risk, and that's the beginning of the end. That's why I don't think it's a bad idea to, as you're making money, pay yourself. Like, keep your back against the wall somewhat in trading so that you're not continually applying more risk, because that mindset can get you in real trouble.
Right. And that's why I'd say early on, rule of thumb for newer traders into even your first year. Go find something that's got, in my opinion, a medium, as we talked about, float size, if not larger, and find something that's just a slower mover that isn't but 20 to 30, 40% up. Stick with that. Define levels, your support and resistance zones, learn how to read a chart, because in the end, like we were just talking about, it may be no PR, could be PR, the short squeeze, it doesn't matter. Read the chart. The chart's going to help you out, and then use these little determining factors like we're talking about that can help you trade and find certain stocks. And then like I said, then you just use your setups that you use every day. So it's essentially, to me, you come and find your craft like we talked about, and you're doing the same set of parameters every day. Okay, I'm looking at this, I'm looking at that, and this is the setup I'm looking for.
Exactly. And that segues right into the easier to learn kind of the price action. Penny stocks are going to exaggerate common trading patterns, breakout squeezes, consolidations. You'll see them often. Like even today, I saw a ticker, we shot up and then we started immediately forming a descending triangle, which is lower highs forming towards support. It cracked that and just shot straight down. So the patterns are exaggerated here. It's going to help you learn, and experience is the best teacher overall. Josh was pointing out earlier, essentially, that with trading, you got to find your edge. You got to find your edge. And by doing that, you're going to be paying some market tuition. You have to lose to win. I like Michael Jordan's quote on this. He said, the only reason that I win is because I lost. I lost the game-winning shot X amount of times. I lost this many games. The only reason I'm really a winner winner is because I lost. So tuition's part of it. You're gonna lose, but you gotta lose well. Losing's part of it. There's a few different ways. I mean, in trading, there's 3 results you should have, not 4. Small winners, large winners, or small losses. You gotta eliminate the large losses. You're gonna lose, but you don't have to lose largely.
Right. Yep. And yeah, true. I mean, 100%. I don't know if I can share my screen right now, if it's a possibility.
Yeah, let's try it.
Yeah, let's try it. Let's do share screen, entire screen. And I want to do this guy right here, window screen 1. There we go. It's just exactly what we're talking about right there. You're repeating the same process over and over and over, right? Here is a trade that does the same thing. It's just repeating these flags, right? You're going to notice these same patterns day in, day out. And this is where you want to find what I call technical sound setups, right? So this is what you're looking for day in, day out. When you find the certain areas working out over and over and over, flag. This is a different ticker, flag,
Go up
right?
to the top chart too. I mean, when that thing, I'm more of a short seller. When it cracked the trend, then you have a clear risk there. You know, it pops up back up to the trend to give you an entry, and you're right there next to your stop, which is what I love. The risk is real tight defined on that play.
The trend lines in is exactly why I talk about this, because it can define your risk, even on downtrend breaks, right? So if you take it, now you know your defined risk. But this is one of those things that the longer you do this is one thing I've been talking about for years. Keep old downtrend lines in, keeping your lines in, because you just go back to this play where it was right here, the bounce right here, right? You're going to see this over and over and over and over right there, in my opinion. So that's what you want to look for. Find the repetitive patterns. You're going to see the breakouts. You're going to see squeeze patterns. You're going to see essentially triangles forming over and over and over. U-shapes, letters forming over, M shape, W shape, U shape. Here's like little micro W's along the way right here as you pop up on that uptrend channel. Like you were talking about, majority of traders, majority of buyers, however you want to word that, right? Where's the mob at? Where have they taken the play? And then when you find enough, if you can define it, how many other traders have identified the same uptrend channel? So when it cracks, now you know where to start taking for a short to the bottom side of it.
Yeah, absolutely. Part of my strategy is waiting backside play. So I'll see where the mob is. I like what you say, the mob shift. In small cap land, guys, as you're going to learn in this space, the mob is real. They go from one ticker to the next ticker. They just bounce back and forth like a ping pong ball. So I like to kind of focus on where has the mob gone, and let me short the name that was up like the previous day or two in small cap land, and take the ride down where there's less attention, less momentum. Maybe the longs in this name are looking for momentum going into the next day. They don't get it. So they profit take, and I like to ride that wave down with them as they profit take.
Right, 100%. Great example of that, just real quickly while we pull some charts up, which I know you guys have been loving on the chat over there, the group chat, is EHAR, right? We get this continuation squeeze from last week into today. Now look what we're doing. Exactly what my boy Kevin over there, Kevin, instead of AK, we got KA over there talking about, and then boom, short yesterday, right? I think it came out with an offer, and then more continuation today. But
Mitch Michael and I were talking about, we actually took the short on this. I mean, it was a great setup, backside play. Yeah,
100%.
And guess what? They came out with an offering. We're going to dive into that right now, guys, as far as frequent catalysts. So small caps, they come out with a lot of catalysts, including offerings. But we've seen this year specifically, I know you were going over blockchain, and then this year has been like Ethereum and Bitcoin related treasury strategies. You see like that strategy in every press release. All these small cap companies, regardless of what they are, a pharmaceutical company or not, they're all turning into something else. Because they're trying to get long-term investors in them.
100%. Even great example. And it was funny that I think Trump gave the clarification for it to happen back even to 2020 and COVID and freaking Kodak, KODK. And you can Google this yourself right now. Anyone can.
I remember that ticker.
And they got, I forgot how much money to do COVID-19 work. Like what? They don't have it's when I'll never forget, because I was,
funny.
They're like, hold on. We're all like scratching our heads. Kodak is in Canada. What are we doing with COVID-19? Then they get looked into, yada, yada, yada. So that just shows you though, when that trends, get set in and these catalysts come in. And that's one thing. And another one I've noticed over the last, and it kind of goes into that AI technology. You've seen a lot of these small cap plays working some deals with AMD, or most recently NVDA, of course, with the chips and technology. So you'll see that. And so it's just catalyst after catalyst. But what I always go back to is make sure you understand and just trade that chart. Don't buy into something. I have so many traders I've worked with that it's like my first or second one-on-one one-on-one with them, and they're in 5 or 10 or 15 different plays, and it's the next this, it's the next that, I'm like, and they're at 3 or 4 or 5 cents now, and I'm just like, listen, it's not happening.
Number one rule of thumb, guys, do not marry a ticker. They're not loyal. Don't fall in love with the news. I call fundamentals fundamentals. There's 3 types of analysis: fundamental, technical, and trader analysis. But these days, I hardly look at the news anymore. I'm more focused on price action. You gotta not let your ego get in the way of your trades. And as you build more of a case for like why you should be involved with this ticker, it's gonna create bigger ego, bigger sizing perhaps. You're applying more risk to this trade than you otherwise would. These are things that should never happen. Don't believe the hype of the fundamentals. These companies, especially in small cap land, they need you as a long-term investor. As I did when I first started my journey, believing the news. I'd be like the only one on these earning calls, Josh. I'd wake up and I'd be there right at 7 a.m. I'm listening. I'm there. It's just me and the CEO. He's telling me all these things. I'd end up buying this ticker. It has no volume. Without the price action, as AK-47 saying, there's nothing. You need volume. If the stock is flatlining, there's no money to be made. There's no opportunity. We can make money when a ticker is going up or down. That's volatility. We're hunters of that volatility and managers of risk ultimately.
Right. And then you got to watch for no news PRs, which you're going to see sometimes as well. Be a brain scratcher. I get it. Just trade the chart. Again, let's just go to the technical side of things. Try to start understanding where the trend is at. I always say find the trend within the trade. I just showed you that with that one ticker where you saw the bull flag, or essentially the squeeze on flag. You're going to find those trends. That's what you need to worry about. But yeah, it's so often that's what traders do. And again, like you talked about, volume equals action, action equals money.
Yeah, right into the risk, the manipulation. Some days, dude, you'll get like the ticker that comes out with positive phase 3 trials that's selling off. And then you'll have something like GME that's pumping, something with the Kodak, any name, like DRYS, that shouldn't be up, but just a high short interest. Yep. But you have actual companies. Also something to keep in mind, traders, is there's a saying, buy the rumor, sell the news. So most of these tickers, they're actually pricing this news in months in advance.
Manipulation. Yeah. We have all insider trading. I mean, CR Trader, my top student talks about this all the time, where we'll see it in pre-market, a play spikes up, and then you're like, why did that play spike up? And then an hour or so later, then the PR's released. You're like, okay, what's going on here? There's something sketchy. But like you've talked about, I see this so often, and you'll go through again trends. So you've got to notice the trend changes in stock market. Where in 2022, like you especially, you started noticing that. I kind of called it after GameStop. I was like, I don't have anything, a book around me. I have a towel. I was like, rule book out the window. I was like, there's no trust. Just read the chart. Like, what's going on here after the whole GameStop thing? But you noticed in 2022 into 2023, I would have my group of traders, right? And I'm streaming or whatever, doing my thing. And they were like, AK, why is this play fading off? It's got positive phase 3 this, or they'd have positive cancer, some kind of cancer news. Like it's got good results.
They just cured cancer. There's cancer.
Yeah, right. Yeah. And I'm like, no, short it. It's whatever. And I'm shorting it. And they're like, but why is this play? And I'm just like, listen, it's just, you're all over it. And so that's why we kind of you're going to see us emphasizing that. Just go back to the chart. What's there to trade? What do you trade on a day in, day out basis, which we'll get into in the last segment of this, is what we kind of trade and what to be looking for. But yes, there are days and there are trends and times where PRs mean something and you can trade them, especially what we talked about, what the volume is there. So now we got volume equals action, you're right, equals money. But yes, there are times, and don't try to scratch your brain or going like we talked about, don't mirror it. Oh, it's the next, it has positive cancer this. That just happened in the last month where there were traders in chat. In one of the chats I saw that were talking about that. And I'm like, I don't care what that PR says. Because I noticed the chart and what it was doing and going down. I'm like, it is what it is. I'm sorry. I know it's good. It's a good PR, but here it's going down. And so that's where you just have to understand and take these PRs, and again, even the manipulation, with a grain of salt. Again, go back to what's technically sound and works best for you. Going back to that.
In small cap land, you can't have expectations in small cap land.
Stop. You're good, guys. It's fine. It's just Einstein. Yeah, my just wanting to get out. He's like 16. He's like scratching at the floor. Yeah, he was back there behind me. So people probably saw a dog. Yeah, right back here, and they're like, "What's that? Let that poor dog out." Anyway, all right.
Using as animals.
Yeah, right. Yeah.
So no expectations, guys, in small cap land. Expectations are a visual representation of what you think is going to happen. It's an interesting conversation because you're trading like a positive EV, expected value. You got to trade your edge and repetition, but what you can't have are expectations. So get into it, understand the risk. The market doesn't hurt you. Your inability to really understand the uncertainty involved in each and every trade is what hurts you. I know a lot of good traders, well, in the risk section on this, I know a lot of good traders that have blown up a lot of accounts because of that. They don't accept the uncertainty. They're going in trying to trade like the fluctuations of this one ticker. They end up becoming a long-term investor in a ticker they know nothing about. You know how it goes. Deer in headlights, buying a bull flag breakout on this ticker. The company needs you for that. I mean, that's why they're coming out with the news. I mean, these small cap land, they're in need of investors. So that's why they come out with these PRs constantly. They'll even recycle press releases. Have you seen that? Like a press release.
DAGX was when I saw it do it all the time back in the day. I'm like, this is like the 15th time they put this out in 2 months. Like, why are you doing this to people?
They get suckers with it though, yeah.
Yeah, every time, and then in the end, we'll go back to where this segment started, offering. So they get up to where a certain price, and then THAR, like THER, we just showed you, puts out an offering, and then boom, you're in a place still long because it's the next whatever you think it is, and it's back to where it came from. That's why
it's terrifying. It's terrifying. Know the shelf registration on these because they had a couple million at any point in time in favorable market conditions for the company that they could just dump these. Well, on that note, guys, this was episode 1. I'm excited to dive deeper into small caps, penny stocks. But the last word goes to you, Mr. AK-47.
Well, I appreciate that KA-74, but no, like we talked about, I think if we would made a list, if we had then a PowerPoint, we went through, I think 5 or 6 different things to go through there. It'd be the same thing. That's what you want to keep your trading. Find 3 or 4 different things that you're doing the same thing every day. You wake up, you break down a chart, you find the certain pattern you want to trade, you put your lines in, you trade them. You rinse and repeat that day in, day out. Next thing you know, as we all know, as we get older, time starts to fly by and you're 3 years in, you're 5 years in, and you're actually still doing this and you haven't wrecked an account or multiple accounts and you're enjoying your journey in the stock trading. So again, just keep it simple, find what you're good at, and just repeat that day in, day out.
Embrace the risk, accept the results, guys. We will see you in episode 2.